Okay, cool. Well, thanks everyone for coming. So we have 3 talks tonight. Actually, there's only 2 announced, but we have a third talk as well. So Benjamin will first talk about MaidSafe. I'm sure lots of you have heard about MaidSafe. I've heard about MaidSafe, but I still don't have any idea what it does. So I look forward to learning about that. And then I'll speak about Tendermint, and I'll try my best to make this comprehensible, although it's not that easy to understand some parts of it. And then Yassine is going to speak about venture capital. So he's a venture capitalist, and he's going to speak about venture capital and Bitcoin, blockchain, and etc. So yeah, with that. Well, first of all, so Ryan here is volunteered to, first of all, live stream this talk. He's just moved here from San Francisco, and possibly live streaming like all the meetups that will ever come forever. Which is amazing, so thanks so much. I've been asked lots of times, like, why don't you record this, why don't you record this, and it's because we didn't have Ryan.
So thanks Brian and Bitcoin Startup for both hosting today and actually giving us the opportunity to present. I think I will make a brief disclaimer first. So this is going to be also a personal talk to some extent. It's unavoidable. I moved, possibly like Ryan, this morning from Glasgow to Berlin to start a new project. So up to last week, I was a full-time developer for the MaidSafe project and the Safe network. Now I will move to the community to help support the project. And so for me, this is a really good time to reflect on the work that we've done over the past year and a half, what we've done right, what we've done maybe should be doing better. And I welcome a discussion. So I will start off briefly explain what we do, why we do it, and maybe go into technical depth. So if you have questions, don't be afraid to ask during as well. It's probably going to be more interesting if you do. I'm sure you will. And then, as I am now independent, I will as critically and honestly try to respond to those questions, and I will also raise my own questions, because the landscape actually has moved quite a lot over the past year. I entered it last year, and quite a lot has been happening. So that is, and I am not going to be claiming to be an expert in anything, possibly not even MaidSafe, but hopefully a bit. But as we take a step back towards the end, and we can have some discussions, then I'll do my best to sort of understand those projects, but I won't be guaranteed to not make mistakes. So yeah, with that short disclaimer, so why MaidSafe and why are you listening to me? The vision of a secured and decentralized internet service is not unique to MaidSafe. Many projects try to accomplish this, and MaidSafe is for sure not unique. By the way, I'll mix terms like MaidSafe and the Safe network. So the Safe network is the community behind the network. MaidSafe is the official company running or building. But we do belong in the crypto sphere in the sense that we value first cryptographic privacy, and we try to enforce that. So we try to make a better internet, one that is properly secured and doesn't get compromised as easily. And then one aspect I think that the Safe network is unique in is that we try to provide a autonomous network. And what we mean by that is that there is no third party involved. So we try to provide distributed ownership of your data, and that only works if there's not a counterparty owning your data. But then, of course, you might argue Bitcoin already does this. Bitcoin is a distributed network and does distributed ownership, hence we have a cryptocurrency. What my reply to that is that the Bitcoin blockchain, or any blockchain technology for that matter, is a globalized variable. So every node in the network will obtain the same complete knowledge of the entire history. What MaidSafe does different, or where you can contrast it, is that the nodes in the network have an explicit incomplete knowledge of the entire state of the network. So we try to get to a consensus mechanism that is distributed, but also has local knowledge of the network. The main reason you want to do this is because you gain in scalability. If you add more nodes to a Bitcoin network, you gain in security, but you do not get more processing power. If you can achieve a decentralized scalable consensus algorithm, then you can add more nodes to the network. You will gain security, but you also gain more computing power. And so that's the two reasons that scalable and distributed ownership, those two aspects, are why I left my position as a theoretical physicist and went to work for MaidSafe, because they had an implementation when I joined them, but it wasn't clear what the protocol was. So over the past 15 months, I've largely spent my main focus, whilst writing actual code, on trying to pull out what that protocol is within the SAFE network. And that is an incomplete work, but I think we have made some progress, and that has shown both in the implementation, which originally, when the crowdsale happened, like talk about that, was like 500,000 C++ lines of code. We then refactored the logic into 73,000 lines of C++ code, and then we switched to Rust, which was possibly a really good idea. I love Rust, actually. I really became a big supporter. But from a networking aspect, it's now fighting us again, because it's not ideal for input-output asynchronous networking, and we have to build a network, so we're kind of hitting some walls again there. But having said that, I need to catch my drift. So my main point, or my main objective on working on the MaidSafe protocol, was finding that protocol instead of just having an implementation, which arguably is less interesting than understanding why it should or could work. Then why is it called SAFE? So Secure Access for Everyone is obviously the acronym. And some quote that I paraphrased. The internet is not our most important fight, but it does, or it might prove instrumental to all others. And so that's probably the big picture view. The internet will determine how we collaborate on global challenges, but it also affects our established civil liberties that we have. And so those are two sort of kind of motivations for being in this sphere of improving protocols. The question, an anecdote, as I just moved from the UK, for example, there's the investigative powers bill trying to be pushed through right now in the UK, which would ban media or internet companies from using any non-corruptible form of encryption, which is ridiculous. I don't think I have to defend that here. So there is an active reason to start building different protocols. Anyway, so how does, what are the 2 points that I would argue does the SAFE network present? And one is self-encryption. We are not cryptographers, so we try to not make the horrible mistake of inventing a new cipher. We're not that stupid. And so what does self-encryption do? it addresses the question that humans usually are the weakest link in any cryptographic system. And to address that, we want to make sure that encryption happens by default. So every file, we chop it into pieces and we use the hash of a sliding window of a next chunk of the file as an encryption key for the previous chunk, do that cyclically. And then those private keys for that file, we also then obfuscate the chunks with XOR, and that's in some sense, that's a perfect cipher. So it shouldn't be that bad. But then you have a list of private keys. We store them in a data map, which is again just a file, so we can recursively do that trick. You can again self-encrypt that list of files, private keys, and you can build a tree structure that ends with a top data map where you have private keys that will unlock your entire file system. It's not constructed as a file system, but we can then mount a file system on top of that. And that gives a second feature that we have, which is self-authentication. So we try to stick very, very religiously almost to there will be no central point in this network architecture, which I think is important. But self-authentication isn't that, again, it's nothing magical, it's nothing really super advanced. But we store the final list of encryption keys that give you access to your entire file system in a session packet, and that session packet is only decryptable with a password that you never send on to the network. So that has plus sides and it has downsides. One plus side is that you only need to remember one set of credentials and you can access however big a structure of files that each partly is encrypted with a unique new key. The downside, if you lose your credentials, you're completely, this is live stream, lost. But probably the best upside of the concept, at least, is that you don't have any central point where you can block access to the network, because the authentication, if you can even call it that, just happens on the client machine. You need to know where your session packet is. If you retrieve that, you can decrypt it, and you can just keep getting more chunks from the network and reconstruct your entire file system on your client machine. So the client doesn't have to trust the network, and arguably, but I won't go into that, the network doesn't have to trust the client. So I titled the safe network the road ahead. It makes sense that I very briefly take a look back. Obviously, I jumped a really big gap there. So in February 2006, MaidSafe as a company was founded. Then prototypes and internal refactorings and reorientations happened. 2013, the C++ code was made open source, and then a year later, there was a public crowd sale of SafeCoin, or rather MaidSafe coin, which is registered on the blockchain. And unless there's questions, I will not go too deep into that. And then a bit later I joined, so I was still part of the community when that crowd sale happened. And then in August I joined, and I guess the biggest landmark that we have today is then in August we released a full pre-release of the stack. So that included the transport layer, the routing layer, the actual logic of the network, and a client example. I have a very bad tendency of always wanting to go in all the things that are still wrong, and I probably shouldn't too much. So I'll skip that. So one question that I did start to ask myself, as I said, my background wasn't necessarily in computers or computing or coding, and I sort of jumped into this new field. What I started to wonder is SAFE built as a product rather than as a protocol? So I'll give a very brief overview of the stack. So if you look lowest, we have connected Rust, which is a transport layer. So it's a peer-to-peer network. We try to actually put some logic into the structure. So the Bitcoin network doesn't have a topology per se. I mean, it has a topology, but I don't think a lot of people know what it is at any given point in time. What we do within the SAFE network is we try to forcefully maintain a very strict topology of which computer is connected to which computer. So that's rather special. I can go into that point. It would be probably a very interesting discussion a bit later. On top of that is routing. So Rust is rather conventional in that it is a peer-to-peer network layer. And then routing does sort of the core technology. Passport is just IDs. And then you have Vault, which produces the logic. And so what I think is remarkable here, or remarkable or not ideal, and again, I'll make sure that I sort of frame any personal comments. What you see is that there is a strong logical dependency still on SAFE client and the SAFE vault, which probably isn't that peculiar. But we have a very strong tendency to have an emphasis on the client API. So we motivate people to build client apps. And one question I have, this is again a personal question, should we also not focus on the routing API where you have the most basic layer, and can we not make it proper protocol rather than focusing as some sort of black box? Because right now we start treating this, or at least from a community perspective, we're treating it largely as something that then exists, and I'll build some application on top of it. Anyway, this is a general theme of the comment that I have towards the end. So, but I'm not saying that it's necessarily bad either. I'll hope to get some input from you, maybe on what you guys think. And so, yeah, I had to produce a handover document, and one of those things was sort of a graph of how the routing layer is specifically structured. So don't look too much at the drawing. But the question is it possible to actually achieve what we wanted? Do we want to have one network that replaces all services, or intends to replace all services? I think those are very interesting, critical questions. And I'm not saying yes or no. I'm not saying one is bad, one is good. What I am personally saying, I want to build on the SAFE network, and for me it's much easier to build on the SAFE network if I have a protocol rather than just a client API. So that's my personal perspective. I have no idea how long I've been talking.
20 minutes.
Really? Wow. Okay, that's good. So I'll just rush through this and then we'll get to questions. So obviously, and if you look at the official proposition from MaidSafe, it's the decentralized internet. What we're actually, or are doing, is trying to find a way to have scalable decentralized applications. And if you phrase it like that, then the SAFE network has two basic applications that we're proposing from the start. One is persistent data storage, and the other one is SafeCoin, which would be a cryptocurrency. And then, as I hinted at the beginning, a lot of new projects have happened, and within existing projects, a lot of progress has also been made, and hopefully we've made progress at the same time. But one interesting project that really has risen quite fast is IPFS. And I mean, there are two independent projects, right? So MaidSafe and IPFS, we both have different goals, but we also have some communalities. And so it's based on those communalities that I tried very subjectively to make this last slide, sort of as a provocative point maybe. And it was partially also a reflection of my own part. So we both want to have a scalable, decentralized data platform. That is one thing that we do have in common. We're basically both a DHT. Project and the way they approach problems. IPFS is a conservative DHT in the sense that it's still like any previous DHT, iterative. So you want to know where some piece of data is, you go to the location, you get it back, you connect to new nodes, and you try to, every time you have to come back to yourself to find the answer. Or to ask the next question. I don't know whether people are familiar with how traditional DHTs work. Basically, you see that if you're torrenting something, you will have all these nodes appearing, stuff. You make direct connections to the people who have the piece of data that you have. And if I'm not wrong, that's also how IPFS works. And in that sense, I'm not calling it conservative, but there's absolutely nothing wrong with that. What MaidSafe and the Safe Network propose is, in a very strong sense, different and in some sense untested or unproven at large scale, is that we are internal. So you can pose a question to the network and that message continues on within the network, and when you find the answer or the specific chunk, it gets returned and it gets back to the client. So it ties into this general comment that I'm making, that we're treating it very much as a black box, which has very good upsides. From a security point of view, it also answers several questions. Really, you need to interrupt me if I'm just making blank statements, or if you want me to go in depth. And so I guess as sort of a closing slide or provocative slide, I listed these three contrast points. So where I think that MaidSafe and the Safe Network provide more, or currently aim to get more of a client API, IPFS really wants to be a protocol. It really wants to be the IP of file systems. MaidSafe client, Safe Vault, Safe Coin itself, and all those parts need to work together in a large network for it to work. If any of those parts don't work, the whole is questionably in problems. So that's why I called it holistic, where IPFS has more of a tool-based approach, where they go with small tools and build on that. But then on the other hand, IPFS is efficiency focused, and MaidSafe really tries to not let go of the security focus. So self-authentication and self-encryption are attempts at keeping that baked into the fundamental layer. But that is probably where I will leave it for questions. So I think I made quite a provocative statement. And again, it's two different projects that are drawn on the same line, which is comparing apples with pears. But given that we're trying both to provide a distributed data platform that is scalable, it seemed sensible to try to make some points. But I think, yeah, see, that's the end of my slide. So yeah, thank you. And any questions specifically on MaidSafe or the Safe Network and the technology, or more on the debate?
Applause first and then questions, or first questions and then applause? I think the applause.
Okay. Yeah. Am I correct that MaidSafe is not depending on Mastercoin, even though the crowdsale was only on the Master Exchange? Is that correct?
Yes, so MaidSafe and the Safe Network have nothing to do with Mastercoin.
Yeah.
The crowdsale itself was fueled by the Mastercoin.
Yeah, I remember that. I just wasn't sure if there's some technical dependency.
We will have a technical dependency when we try to convert MaidSafe coin back into SafeCoin. So if you burn them, we'll have to reapply the Omni protocol by now.
And here's a question: do you see sometime in the future a way to integrate the Safe Network with Bitcoin on a side chain on something similar, or do you see it as a standalone kind of thing out there?
That's a very, very interesting question, which probably would lead me way beyond, because it's sort of growing in my head and I have like a wide range of answers. Okay, I'll provide like extremes. One way that you could do is the same way that you could combine it with IPFS, by the way. So you have a distributed hash table which naturally has deduplication, and if you have it verified, then you can. So what the Safe Network can do is you can. But each can have their own copies. I can make sure that if I have a different belief of what the actual blockchain is, only the differentiating blocks need to be stored additionally. And I think that's a very interesting perspective. And that's basically due to the DHT foundation that we both have. But then the Safe Network would sort of help you validate that was your belief when you come back the next day and ask, like, what did I think the blockchain was like yesterday? The alternative is if you, so that's sort of the complete opposite of the spectrum. If you have a scalable, decentralized, could you wrap that around the blockchain? And then you're not necessarily helping with just the size of the blockchain. You could be helping in the problems where scalability of transactions comes in. Could you sort of make the Safe Network into a sidechain? That's a complete or a second alternative things you can consider. On that, the answer is way less clear. I think it's a very interesting problem to solve anyways, scalability of.
But you don't see a technical reason why it could not integrate? Because I'm thinking like, I'm kind of at a point where I think like,
to be honest, no, I actually don't see a technical reason why it could not integrate. If you're going to ask me, can you make that a more solid statement, then I will be very embarrassed.
but could it be that you say, well, there is this one reason and that's why it's never going to.
No, I'm not aware of one fundamental reason. Yeah.
Okay, thanks.
It makes a safe coin, my understanding, is not a blockchain-based system.
Yeah, I wanted to make that as a very explicit sentence in my talk, and I kept running in my head that I forgot to mention that.
Which means that if it works, it's infinitely scalable.
Well, infinitely is probably the inappropriate word, but yeah, more scalable. Yeah.
But it's quite how well is this safe coin protocol defined? Now is there already a working prototype or something, or is it still kind of
The biggest foundation that you will have for not a protocol but the implementation is that we build it on top of structured data, and so structured data can be improved as well. Recently I was reading on conflict-free data structures, which I think is very interesting. But structured data, sorry, see this is where I diverge. Structured data is what we use for mutable data, and that's basically protected by your own cryptographic signature, so you know that it's not corrupted, and then maintained by the group. So the history, it's a very rough, tiny blockchain for the one coin individually, but then you forget the history as well after immediately, or potentially later after some blockchains, or after some changes in data. That makes sense. So you keep a history individually per coin. So I think that's maybe a very interesting difference to point out. The blockchain keeps outputs, and so you have a full ledger of everything that happened. SafeCoin, you should think more about as a physical or an informational representation of as a physical unit. Of one unique piece of data. So that's how double spending is addressed, is that it should be impossible to have a double copy, and if that one copy changes ownership, then it can be spent elsewhere. That's the crux of why SafeCoin should work. Choosing my words. Because currently we don't have it running testnet, of course. Yeah.
What a network really stands for? Is it just storing data, secure, or is it just selling data among each other? Is it just a network where we should build apps on top of it? What types of apps? You have a long story, almost 10 years or 9 years, so you have redeveloped all the source code several times. So now you have launched something. Is it the final point? Have to find your real story. So I'm not really sure if I really understood what is your core competence and what problem you want to solve. So I'm a bit lost.
So I think that is largely a legitimate question. Being very vague and diplomatic in my response.
Just say distributed Dropbox.
Yeah, but then that is the point that I'm making. Then you sell it as a product, and is it just that? Is that what you really want to build? Because do we all want to be part of one product?
Your infrastructure. You are looking for other parties that should develop Dropboxes on your infrastructure, right?
Yeah, and so I think my answer to your question would be, and again it's partially biased because like I said, my interest is mainly in discovering the protocol. What I think the core value of the safe network is, and predominantly should be in the future, is, and by the way, I'm not officially representing MaidSafe anymore, is that you want to find this combination of a distributed scalable data platform, so storing data, plus a consensus algorithm that is also scalable and distributed, so that not every node needs to be involved in every decision that happens on a network. Then if you put a cryptocurrency on top of that, that is almost actually, I would argue everything above that is actually application. So I think we draw, and this is live stream, so my personal opinion is I think we're drawing the line a bit too high, and I would actually want to see it drop, if that makes sense. So in the stack, if you go down, everything above routing and several functions should drop into routing, should actually no longer be part of the protocol, but should be considered an application. That makes sense. I'll try to make my point in a different way.
Because I'm looking for use cases. You want to attract people to develop applications based on your networks, but then you have to say them why they should use your network. What can they do? Just store data? Okay, I can do it everywhere. Yeah. So what's the real advantage? So what can I do? Because it's a lot of power I have to invest developing an app.
But if-
advantage because
If
I have
you're
money
looking,
again.
sorry, if you're looking from the outside of things, I actually think we're probably doing a good job-ish, I hope. Because we try to really make the interface for any web application in standard APIs. So we have FFI bindings to Node.js and Java. So importing your application should be almost trivial. So that is one thing where I do think we put the right focus if you're looking from the client perspective. But like I said, I'm sort of way more in the lower depths and I just don't care about it too much. So I think that we're doing a right job there. In that you wouldn't have to refactor your application too much. It has a REST API and it has a...
I think his question is more like, what sort of application would you want to put on the safe network and why?
Isn't it basically just to get rid of servers to make, the base?
Yeah, I largely think that this is almost a philosophical answer that I'm giving you, right? If you, tying back to the original motivation that I gave, if the current internet is corruptible and you can, on a mass scale, steal data, should we try to prevent that? That would be my answer. It's probably not the only answer, or maybe people have different motivations, but that would be my motivation. Why are you doing this? Is because I don't like that any third party has ownership over my data. That's what I mean with the distributed ownership. If I want to use a service on the internet, I don't want to sign off my ownership of the data. I'm happy to pay them, and so that's where the safe coin argument comes in.
But that's the question, because you don't address the end user. So you are addressing application developers. So and at the end user, I have to trust the third party that where I want to store my data. This third party will use your network for sure. They can say,
What do you
okay,
mean?
it's on the same
The whole
network.
point would be null if you would have to trust a third party, right? That's what we try to also avoid.
The third party is the black box.
Yeah, arguably. So it has to be audited, I think, on security aspects, which again is not a trivial thing because it's a new thing. But yeah.
Okay.
Maybe I can help. I think what this gentleman is looking for is like a vision that an end user would understand. Like with MaidSafe we can build this kind of application, this and this. I guess.
So is there a question of trust? Yes. Most people won't validate the full logic of the safe network to verify that then it's uncorruptible, and that is also just not yet verified. So is there a question of trust? Yes, you have to sort of trust the label of the safe network at that point when it launches really in full rate. Is there a question of trusting your app developer that builds against the network? There we provide a very specific answer. We have the safe launcher, which is, of course you can write an app that bypasses it, but the guidelines will be, or are actually already, that an application only talks to the safe launcher. So you have one place that uses your login credentials, and the applications only get an indirect access to the network. So they don't ever see your user credentials, because that would be, again, a security issue if you have 10 applications and you would have to trust those with your user credentials, which are quite vulnerable. That's where in the client library we have the safe launcher, which runs as a daemon. And so and I think that's also a user advantage. You log in once, and all your data and all your applications live in the same space, in a secure, not a virtual machine sandbox, but in a sort of data space sandbox. So I think that is possibly from a user. I'd appreciate having a
second part of it, you kind of made it, your use case like kind of a prerequisite what you have a persistent storage, which is not need to be just a secure thing. It also need to be reliable, but you implemented on non-reliable nodes essentially.
Yeah,
So basically, what's your replication rates? Have you been testing it in the realistic environment of the large scale value, or is it still in the air?
I will lift a few tips out of the thing. The answer is no. We haven't tested in a reasonable, realistic situation, which I think is a big problem, and we're really working, well, I was working, to fix that, and get there as soon as possible. So the answer to your question, December is the aim for soft launch, but there have been some delays. I mean, also is an advantageous that I hopefully for myself, sadly not for MaidSafe. That sounded really bad. So, I mean, we've had some bumps. I actually hinted at that. Rust is a really beautiful language, but the asynchronous input-output is actually not ideal, and so you could argue maybe we should have used Go, because we're fundamentally also doing networking, and maybe we wouldn't have bumps in the road. But I think we're getting there very fast. But your question was it verified, and how do you get from unreliable nodes to reliable nodes? That is where I've not gone in depth in this, but that is where the protocol gets interesting. And that's where I liked working in the routing library, because you have exactly this. You're trying to define simple rules for a node to execute that by itself don't mean anything, but if they collectively get executed, you get an emergent behavior that produces different properties than the nodes had individually. And I think that's the crux of what the safe network is trying to achieve. It's also why I was interested as a physicist, tied to my background. Is that possible? Yes, I very strongly believe that is possible. You can get different behaviors. So for example, you can get reliable behavior as a group where the independent nodes would not be reliable. Again, of course, you will have assumptions, like the blockchain has assumptions that 50% of the nodes need to be honest. I mean, that's a traditional one. There's been many discussions on where that boundary lies and how you can hack it.
It doesn't make the assumption that 50% of the nodes are online at any specific time.
True. Yeah, you also have an assumption on the number of nodes present. Yeah. But it ties to this question that I sort of made, that it's holistic. Once you treat it as a black box, you have problems like this that arise. You need to have that emergent behavior only appears if you have a large-scale network online. And then you can assume that a certain number of nodes are statistically always online. If you have X.
Yeah. I understand, but there is also a question about verification rate, because it immediately goes to costs. What do you need, like, kind of, in your models, what's verification rate? Does it needs to be 10? Is it needs to be 1,000? Is it needs to be 1 million? And this is pretty much like where the cost of verifications would be at the end.
Also true. I think that's a very valid point, because, and I really want to be careful what I state here, because I tend to be overly critical both for myself and for anything I work on. But I think it's true when I state that one assumption that runs on the SafeCoin model is that it is going to be cheaper than traditional storage. That is not easy to validate. If you're okay, I'll leave it there. Don't want to really gain points. any more short questions? Because I think.
Okay, last short question.
I have two. How's the project financed, and why did you part with MaidSafe?
So the first question is easy to answer. So it was initially funded by private investors, mostly local from the area, over possible several rounds. And then in 2014, obviously there was a crowd sale where, and I'll keep it brief, which avoids me getting into the details, where we raised money and then are burning up that money. That's brilliant. The second question, why did I leave MaidSafe? Is a personal one, of course. I sort of hinted at that in the talk as well. So I want to build on top of a network that can provide me distributed ownership, and I worked with them a couple of months from abroad, but they were still trying to find out how to communicate with the community, and then they're Scottish, so the sound wasn't perfect, and I couldn't understand the word they were saying. So I realized that it wouldn't really help if I wasn't present. So I made the decision to actually go work there, but that was only for a limited period of time. So I have, that was anyway for 2 years. So I'm moving on now because I'm pressured for my own project that the clock, the world doesn't stop on my own project as well, and I can't just ask, please all hold because I'm still doing this other project. So I have to Cool. Thanks. Oh, cheers, yeah, I didn't even think.
Alright. Cool, so I'm going to speak about Tendermint. He's mentioned sort of consensus protocol. Well, Tendermint's a consensus protocol. It's a proof of stake consensus protocol. And I'm sure a lot of you have heard about proof of stake. It's this notion that it's been around forever, that there's this other way of doing consensus, but if you're like me, then actually properly understanding that, I haven't never done that, so I took the opportunity to dive a little bit into Tendermint. So I'm going to briefly talk about what are the problems with proof of work, then sort of what is Tendermint, how does the Tendermint protocol works. Now I have to disclaim it's not easy to understand, and there's also no documentation properly on it. Then I'll briefly talk about permissions, which is sort of something, because the company I work for, Eris, we are basically the main user of Tendermint, and so we have also done a lot of development on Tendermint, and part of that is permissions. And then also I'll talk briefly about sort of the idea of, because currently I guess Tendermint is mostly used in context of permission blockchains, but it doesn't have to be. Like, Tendermint is agnostic. You can use it for either, and originally the idea was actually to sort of, be a better alternative to Bitcoin's proof of work. So I'll briefly talk about, that idea of having basically sort of a Bitcoin type thing without proof of work. So what's the problem with proof of work? Well, I'm sure a lot of you have seen all of those, but it's very expensive. It tends to get really, really centralized, and there doesn't seem to be a good way of preventing that. The Ethereum guys have spent lots of time and money trying to figure out ASIC resistant and mining pool resistant proof of work algorithm, and doesn't seem to have worked out very well. Also, the security model is sort of unclear, right? So with Bitcoin, what's the risk of something being reverted? It's very hard to tell, right? So any time somebody could come with a whole lot of hashing power and just take over the Bitcoin network. And well, I didn't expect that, but well, now it happened, right? So it's something that you cannot really plan for. And of course, even worse, somebody could go back and undo transactions. And again, what's the chance of that? Who knows, right? It hasn't happened, but it could happen, and you can't quantify that risk. And the other problem is if you want to increase the security of Bitcoin, well, they're sort of assuming you keep the level of decentralization stable. You know, the only way of doing that is basically sort of add more hashing power, which basically means you spend more money and the whole thing just becomes more expensive, right? So the cost of attacking only increases if actually the cost of maintaining the network increases, which is not a very nice property. It's also difficult to do more fine-grained stuff, you know, with permissions. Well, it's not very suitable for a lot of contexts where people are now interested in blockchain. So let's say 10 organizations want to run a blockchain together. It doesn't make sense that they all start mining and like try to compete with each other. So it's unsuited for that. It's basically unsuited anywhere where the goal, where you don't have to protect from a civil attack, right? Because that originally was Bitcoin's goal. It was that anybody can join the network at any time, so we have to protect from someone coming with 1 million entities and taking it over, hence we make it expensive, right? That's the civil attack thing. And in that context, Bitcoin makes quite a lot of sense. It's probably not the only way to do it. I mean, you could probably use Tendermint in the same environment. But especially when you let go of that assumption, you don't have to protect from civil attacks, then it doesn't make sense. And also, of course, there are lots of scalability problems. Although there's now this Bitcoin NG idea, which is super cool, which would improve the scalability of Bitcoin. But even so, like Bitcoin and proof of work, they're not very scalable. So what's Tendermint? So Tendermint is a open source proof of stake sort of blockchain protocol. Now there's no Tendermint coin, there's no crowdsale, like there was been none of that. You could use Tendermint to create a cryptocurrency. You can use Tendermint for lots of things, but and I think the idea was at some point to create a Tendermint cryptocurrency. But then instead of doing a big crowd sale and trying to develop something later, Jay actually tried to develop the thing, get it running, and so that has been the effort. And there has been none of the crowd sale stuff. Maybe it will come at some point, and I'm sure people will develop cryptocurrencies based on Tendermint. So yeah, the guy who developed it is Jay Kwan. He's a developer in San Francisco, and there's also a startup Tendermint now, and yeah, so you can use it both in a permission context and a permissionless context. Basically, it's very flexible. You can sort of make it do whatever you want. And it's very similar to, because there were sort of these Byzantine fault-tolerant algorithms, right? Sort of a little bit like Bitcoin, much before Bitcoin. And Tendermint is very sort of informed by that literature. I think a lot of people who came from the Bitcoin space, they didn't really know that literature, so they just sort of invented new things instead of like also looking at some of the other research that had existed and seeing how that could be adapted. So Tendermint did a lot of that. And the security in Tendermint is achieved in a different way, right? It's basically achieved by people putting up security deposits, and if they do attack the chain, if they do like sign on 2 different forks or things like that, then they get their, you can prove it cryptographically, and basically their collateral is then cut, right? So they're punished. And that's interesting, right? Because you can, you could potentially, let's say you had $5 billion were secured by a chain. Well, you could say that the validators need to put up $5 billion worth of security deposit. And what's the cost of that? Well, it's sort of the cost of $5 billion of capital, let's say 5% a year. So, that's, in Bitcoin, how much does it cost to get the majority? It's a fraction, a tiny fraction, right, of the actual value of Bitcoin. So you can get a lot more security for a lot less money, basically. And also performance-wise, right? So you can get block times of like a second and thousands of transactions per second. So it just can do much more than you can do with something like Bitcoin. Although this also sort of depends. So if you wanted to do a Tendermint implementation where you have 1,000 validators, for example, then you might not be able to do 1 second block times, right? Then it might be 5 seconds. So how does it work? So basically, the idea is that you have validators, and the validators have to put up a bond. Now the bond is the currency that is being secured, and you could also imagine that the bond they put up is tied to some real world asset. So let's say like 5 entities together say we're going to run this blockchain together. We'll put up this blockchain coin in there that sort of measures whether we are being well behaved on the chain. And then there's a third party that holds some money from all of us, and if we are doing something funny and we lose the bond on the chain, then that money off chain is, for example, we lose that money. So you could do something like that in case you don't have, basically in case the chain itself, the point of the chain is not to like secure some on-chain asset. If of course the chain is like Bitcoin and it's securing a currency, then you can just use the chain asset itself, but you can also use it to sort of track an off-chain asset. And afterwards, it's very simple, right? So you have a voting process, and intuitively that kind of makes sense, right? Because Bitcoin is a little bit like a voting process, right? So you have people sort of getting votes in proportion to their mining power, and well, Tendermint works like that too, except it's not just sort of like a voting process; it's really like a voting process. So you have different stages to that. So the first is the proposal stage, and in the proposal stage, there's a sort of a random algorithm, and the chance that you get to propose the next block is sort of in proportion to how much of the bond you put up. Although you could customize that too, you could change that. So let's say there's 10 validators, each put up a 1/10 of the bond, then they have a 1/10 of the chance each block to be the proposer. And then basically everybody else, that gets sent around, people sort of vote on that, and only 2/3, or more than 2/3 of the validators vote for the block. It goes to the next stage. It's a pre-commit stage. So I had a long discussion with Jay yesterday about like these different stages and why they work that way. But basically, it's important because if there's like network segmentation, you need to make sure it's in sync. So you have 2 different stages. So first of all, people vote on it, and then people commit to it. And you need to have 2/3 or more than 2/3 of the validators to sign every block. So it also means that if you have a third or more of the validators who are, for example, want to attack the chain, then it like doesn't work anymore, right? But what's nice about Tendermint tends to be is that you don't have these like strange forks like you would have in Bitcoin in the case where you have a third attacker, but it just stops. Like the chain stops, you can't do more blocks. And that's nice because really that's what you want, right? Because the chain is obviously not working at that point. It's being attacked, weird things are going on. So, well, you would like to create a stop, so people aren't deceived, right? With Bitcoin, you could have that, my wallet, I think everything's fine, right? It's not. People are forking and I'm on the wrong fork and I don't have no clue about this and I get all spent and stuff. So that's unattractive property, and it's a lot more attractive if it just stops and it's like no new block, and then we can figure out what was wrong. So I don't know if this is helpful. So this is sort of a sketch of it. Now if you want to look into Tendermint more, there's a white paper, but it's outdated, so that's not very useful. There's also a big key on GitHub, which is the most information on there, and this is from there. A better white paper is being written, or an updated white paper, but it's not available right now. Yeah, so the forks is an important thing, right? Because also user experience is bad. So if a fork happens in Bitcoin, and forks happen a lot, mostly it's not a problem because I guess people don't rely on it so much. But for example, I think actually Jay, before he started Tendermint, he was working on an exchange, a cryptocurrency exchange, and one of the problems he had was to figure out how to deal with forks. Because you have all these different coins and they have forks and different rates, and you have to figure out how and can you rely on this or not. And that's a problem, right? And I think with Ethereum, it's a big problem too, right? Because you have much shorter blocks, so forks happen all the time. In Bitcoin, you can say like, okay, at least they don't happen that often, and if you wait it for like one confirmation, it's pretty good. But if you start having a lot of forks, it's a real nightmare, right? Because let's say you give some information to the user in the application, and well, you have to revert that state, and how do you deal with that? But yeah, in Tendermint, transaction is basically, if it's happened, right? You can't go back. The only time when a fork happens is when you have more than 1/3 of the validators who basically sign 2 different blocks at the same time, right? So you need 2/3 of the validators need to sign for you to move to the next block, and the only way you could have a fork is if at the same block height, at least 2/3 of the validators are signing on 2 different blocks. And that can only happen if more than 1/3 sign 2 different blocks at the same time. And if that happens, if you are seeing both chains, you can prove that, and you can sort of submit that proof to the network, and those validators get their security deposit slashed. So you have a very strong defense against attack. Like if you attack in Tendermint, essentially if it's immediately people will slash your security deposit. And if there's something else, but the other thing that's worth mentioning here is that uptime is important, right? Because you need 2/3 of the validators to sign. Well, 2/3 need to be online, right? So if 40% are offline, then the chain stops. So it only starts again when they come online again. Of course, it's not so much of a problem in most cases, although it will probably depend a little bit on the use case and the context it's used in. So unfortunately Jörg has left because I know he was definitely going to say this is not censorship resistant. So I wanted to talk about this. Is it censorship resistant? So first of all, Tendermint, you can sort of set up whatever rules you want when you set up the chain. So you could say, for example, I can say, us 3, we are validating the chain. It will be us forever, nobody else ever. We could do a crowd sale, and 1,000 people buy coins, and then they get the right to validate according to that, and we put that in the chain. So there's 1,000 different ones. So you can do all kinds of things like that. Now, when it comes to, so let's say we have now set up this chain and it's running. So is it censorship resistant? Well, so blocks happen all the time. Right? Blocks happen every few seconds. So let's say I send the transaction and you don't like my transactions. You don't want it in there. So of course, if you're the proposer, you're chosen, then you can say, I'm not putting that in the block, and other people vote on it. But if blocks come every 2 seconds, every 3 seconds, it doesn't really matter, right? Unless you have 90% of the validators. But even then, I would get it pretty quickly, and then you have total control anyway. But let's say you have 10%. So there's a 10% chance I have to skip a block. So essentially, that's not an attack. Only if you have more than 1/3, then you could do things like, you would basically just not vote on any blocks that include my transactions. So at that point, you could censor my transactions. So basically, if you have more than 1/3 of people attacking the network or censoring it, they can do so. But it will be detectable because blocks will be rejected. So blocks will be proposed and they won't get the majority signing, and it will be noticeable because the rate of the blocks drop and people would see it. So at least it will be detectable very quickly. I mean, it's interesting to think about this in the Bitcoin context, right? Bitcoin context, it's actually sort of similar, right? the only difference is that because the blocks happen so much more rarely, if somebody has a 20% mining, it still doesn't make much of a difference, right? It only really becomes, censorship only really becomes powerful if you have a majority in Bitcoin who says, I'm going to go back, and if a transaction of yours is in the block, I'm gonna ignore that block and go back in the longer chain. And so Tendermint is a little bit different, but it's not that different in that regard. So the other thing is that like the idea of sort of you can do anything with Tendermint. Well, you can also say all kinds of permissions with Tendermint. So you could say like who gets to validate, right? You can say what can different people do, right? So some can, let's say, some can create create contracts. Some can send transactions. Some can create specific transactions, and you can say all that, and you can say like maybe those 10 entities can vote for new people to do X. So any sort of governance system, all of that you can do. What's also interesting, and this is one of the parts I still have not wrapped my head around, but Tendermint is being sort of refactored into a consensus engine, which basically is all the code that's consensus related, and then all the code that's sort of blockchain and permissions related. Now also, basically, Ares, we have done sort of all the permissions and blockchain part, and Jay, he's done all the consensus part. So it's also that sort of separation. But yeah, the bigger idea there, and that's is that he wants to essentially use the Tendermint consensus engines sort of in a much wider set of use cases, like going beyond blockchains. So where the underlying data structure doesn't have to be a blockchain. To be quite frank, I don't understand that. And nobody has been able to explain it to me in a way I can understand. But at least it sounds interesting. Yeah, so what about a Bitcoin competitor? Because that was actually Jay's idea originally, right? Like if you look at the website, even though Tendermint has come sort of away from trying to do a cryptocurrency, it's still, he compares like Tendermint with Bitcoin. And so could you create a decentralized cryptocurrency like Bitcoin? So first of all, you could, and that was the original idea. The problem and the challenge would be, how do you select the validators, right? So who gets to validate the chain? And one way would be that you say you auction off the right to validators. So you have, let's say, continuous auction, or every month you auction off maybe 30% of the validators, or in whatever way you want to do it, and then they can buy that with the tokens that's actually secured by the chain itself. So that's quite interesting, and I would think it would be quite a nice solution. Of course, you still have the problem then, how do you select the initial set of validators? And that's actually where, I guess, proof of work was a nice solution, at least at the time. Although if you try to do proof of work coin today, it also doesn't work very well anymore, because you start having like people taking over mining farms, and like, so you don't have a good distribution today. So probably crowdsale would be one distribution. I don't know if it's a very good one, because you also have a bigger, you essentially want to buy distribution, right, of the validators. And so that's the main challenge. But if you did that, and let's say you have some sort of process by which validators get added and removed in a decentralized way, where you can vote on each other, it would actually be a nice way of doing that, and it's probably going to happen, right? I mean, I think it's possible maybe that Bitcoin will be able to, with things like Bitcoin NG or maybe Lightning Network, will be able to scale and remain secure enough. But it seems to me that one will be able to do something like Bitcoin a lot, with higher security, higher scalability, and at less cost, using something like Tendermint. So yeah, that's it. This is their slogan, and I quite like it. So yeah, any questions?
One of the security concerns I've heard somewhere regarding proof of stake blockchains is that this case the validators, do they need to have an unlocked private key online all the time?
Yeah, they need. Yeah, that is true. I was asking Jay about that. So yeah, I think that is a security concern. I mean, I think his answer was like, yeah, I mean, you'll have to have like some hardware solutions to that. So yeah, that's definitely yeah, that makes it. It means you have. I guess it's sort of like with the Lightning Network too. You'll have that too in Bitcoin. So yeah, one will have to definitely put a lot of attention into the security. Yeah, that's true. Yeah.
So you haven't heard of any potential solutions to this?
I mean, I think there probably are ways to secure it, but I don't think there's there's no way around that. Like the keys have to be there to validate the blocks, and the blocks happen all the time, so you can't keep them offline. That's just not going to work. So, I mean, his idea actually, which was sort of that you would put, although it doesn't make a lot of sense to me, but that you would put, because he was, I guess, worried that, like, let's say I'm a hacker and I steal, like, your private key, but I don't use it, right? So you keep signing, but I now have it, and I steal other people's, and all of a sudden I've stolen more than a third, and people haven't noticed, and now I can go and attack, right? So his idea was that you basically build into the protocol sort of a reward. So if I hack your key, I can sort of cash it in immediately and I get some money, right? So that then people wouldn't be incentivized to like hold on to them. But it's not a very nice solution, right? It's not a good solution at all.
Are you familiar with the next blockchain?
Yeah, I mean, I've heard of it, but I honestly I've never really looked into it. So.
Yeah, because in that system there is this functionality that you can lease your power to do the staking or validating.
Yeah.
And I wonder how that would work because you're not giving away your private key. Yeah, I don't know.
I don't know how Next works. I mean, the other project, of course, that is trying to do something similar in many ways to Tendermint is Ethereum, right? Because they want to switch to a proof of stake, and they're working on this thing called Casper, which it's a little bit different in some ways. I think especially they don't want to have such a strong requirement of people being online. So because here, right, you have a problem if more than a third of the nodes go down, and with Ethereum they want that to be weaker, I think. But on the flip side, I think Casper is a lot more complicated, even though Tendermint isn't exactly simple. So they have, so there's at least a decent amount of research going in there from Ethereum side too.
Is the information who is a validator right now somehow public, visible to everyone?
So, I mean, it would be visible, like, whose public key is a validator, right? Like, now, whose identity that is,
Sure.
it could be public, it wouldn't have to be public. Depends on if you want it to be public, right? So it could be a bunch of people who nobody knows. That's totally possible. So, yeah.
But is there a mechanism just to check that by chance not someone is being a validator for a very long time, even though the validation of the group of validators is changing?
Yeah, you would be able to see that, right? Because you have for each block, would have the signatures of the validators. So because they have to vote on every single block, you have those votes for every block.
But just from the history on site of the plot.
Yeah, I would say so.
Two questions. I mean, I'm assuming that those validators are registered on the blockchain itself.
Yeah.
Is it then not possible to? I mean, I'm making really stupid suggestions that are
Probably not.
already. But could you not change your private key quite frequently by publishing that now your public key is now this new public key, thereby potentially mitigating the problem that you, I mean, not necessarily fully mitigating, but reducing the chance of your private key getting stolen or not.
Or you mean by like switching the funds around?
Well, just republishing a new public key which is signed with the previous public key. I mean, it creates a
Oh.
whole list of new problems because you have just more transactions on refreshing all of your.
You mean sort of you have sort of like like HD wallets in Bitcoin? You have sort of like a master public key that you derive other ones from? Or?
Yeah, that would even be potentially more advanced.
That's a nice idea. I like that. No, I haven't heard anybody talk about this, but that's a nice idea. Actually, I'll ask him about it.
Cool. And then I had a second question, but I lost it. It comes back on.
Okay. Okay, cool. Thanks. Yeah, sure. Let's try again. Maybe. Yeah. All right. So, hi everyone. It's my first time at the meeting, and this was rather short notice. I heard about it yesterday. I was traveling to Berlin and got in touch with Brian, who asked me if I wanted to make a quick presentation on the topic. So I managed to come up with a few slides on the plane from Copenhagen, which is a 45 minutes flight, so it's rather short. But yeah, it's going to be quite different from the previous talks, certainly more high level, but I'll try to give you, a VC's perspective on Bitcoin and blockchain tech. So yeah, I'm Yassine. I've been a VC at Sunstone Capital for 2 years now. And you can find me online. I try to tweet and blog mostly about the space. So I don't know if many of you have heard about Sunstone, but I'll just give you a very quick intro. So we're an early stage venture fund based in Copenhagen and opening an office in Berlin right now. I myself, I'm based in Copenhagen, trying to convince my wife to move to your wonderful city. And we are investing across Europe. So we have investments from Spain to Poland to Finland. What's Series A? So different ticket sizes depending on the stage of the company. And so what do we invest in? So I would say that, as a firm, we tend to be generalists. So we take the view that technology is this broad horizontal force that's impacting every industry and value chain out there. But every individual within the team has his or her areas of interest. And myself, so since I joined, Bitcoin first, and was my first area of interest, and then I really mostly the currency side of things at the beginning. I come from a trading background. Then I took the time to really understand the technology, the underlying technology behind it, and now I'm really taking a sort of a broad view on the space, and I'm really trying to focus mostly on that. We've made so many investments, more than 60 investments in the past. Some of our, I'd say we're very proud of being early investors in some of those companies. A lot of other ones are not listed on this slide, but you can have them on our website. And so yeah, I'll start with an observation maybe. So I've been talking to, I've had calls with many founders in the space over this past couple of years, and I've met brilliant people working, from London to Berlin to Lisbon, working on very interesting stuff. But
I came to the, I was forced to observe that a lot of founders, building companies in the space tend to move to the US and mostly to the Valley very early on. And I guess when I ask the question, why, it usually comes back to, well, it's very hard to raise money, especially at the early stage in the space in Europe, because you don't find a lot of investors that are ready to take the early risk in the space. A lot of people don't necessarily understand it also very well. And so, I'll start to, far from pretending being an expert in the field, I speak on behalf of Sunstone, we'd love to play our part in trying to change that. So this is going to be an important area of focus for us. So what do VCs think about the space? So I'll start to maybe try to paint a broader picture of the industry as a whole, and then I'll dive into what I myself am most interested in. So I think first, it's fair to say that the interest is clearly there. I've seen some stats the other day. I think it was the category where the funding increased the most year over year last year. Obviously from a very low base, but still, arguably, it's very hard to argue against the fact that this is a space that's on most people's radar. So it's a new space, it's a new stack, and like with every new stack, the people that will be able to invest in the winners will be able to generate outside returns. So everyone knows that, and everyone is sort of chasing those. But it's because it's also a new stack. With every new stack, you also get to. It takes a little bit of time to understand it and to understand the different layers and figure out, at which layer do you think most valuable companies will be created on, right? Because as a VC, we're in the business of investing with the view to sell in the future, right? So what are the layers where most valuable companies are likely to be created? So that takes a little bit of research, and so one way to, I guess, a good way to understand how VCs as a group think about the space is to look at what they have invested in, right? So I've compiled this data last night, actually, and I think the way I see it, so this is basically the percentage of the total funding, so really since inception, that companies within the space have received. I've used Mattermark to do that. And I try to put it into categories, right? And I think it's fair to say that we've had kind of three waves of funding, right? So I think the first wave was really, and it's kind of close to 80%, 70+% of the total funding, right? Was really the first bounce of the ball type of thing. So mining, hardware, exchanges, and use cases centered around payments, right? I think that wave is kind of done, if you ask me. I think that the winners are sort of identified, at least on the Bitcoin stack. And I think if you came, as a founder with a startup within that field, it would be very hard to raise venture money, right? The second wave, which I think is, it's underway now, right? Centers more, in my opinion, around private blockchains and really infrastructure stuff. So APIs, developer tools, so things like chain.com or companies like that. And I think it also makes sense, right? Because private blockchains are it's kind of obvious as well. It's probably the low-hanging fruit as well when it comes to selling to large enterprises. Everyone knows that those large, especially financial institutions, have very antiquated technology stack, and they're in desperate need for an upgrade. So I think this is it's clearly an easier way to building a commercially viable business in the very short term, which is what a lot of VCs are looking at. And infrastructure also makes sense because now you have this new data structure, and you want to enable developers to sort of play with it and build on top of it. So how do they do that using those tools? And then I think that the third wave, which has really kind of just started now, I think, centers is more at the application layer, and it's a lot of application based on that type of architecture. Anything from decentralized apps, smart contracts, and just like product companies built on top of that. So that's one way of looking at it. Then the other way is probably more anecdotal, and I don't know if you've talked to many VCs in the past, but I certainly have. And that's something that you keep hearing over and over and over again. That's a statement I actually strongly disagree with, and I even wrote something about it. But it's it's that idea that Bitcoin is sort of an experiment, and then that will sort of die in the nest, and then the blockchain will prove to be this fundamental piece of innovation that will change the way we do we work, we live, whatever. And why do a lot of VCs think like that? I think I come up with three main reasons. I think VCs love pattern recognition. So that's pattern recognition is when when you're faced with something new, you try to understand it by drawing analogies to other situations that you've seen in the past. And there's this very long-standing tradition of in tech of the experiment, coming before the real thing. So think Napster to Spotify or Friendster to Facebook, right? So I think a lot of VCs like to see Bitcoin as the Napster experiment before something, whatever new that will come next. I think the other reason is probably usually a misunderstanding of, what a blockchain really is, and the difference between the permissionless world, the permission world, and really the inner workings of the permissionless world specifically, and how it's tied to the token consensus, etc. And then I think the third reason is probably that it's also a little bit of herd mentality. So when you don't really know, you always tend to repeat what other people are saying. And when you read in The Economist that blockchain is the real thing, etc., it's also very easy to rehash that over and over and over again. So what currently excites me? So I'll talk maybe a little bit about the areas that I'm most interested in, and I think they might, they will certainly change over time. But this is certainly where I stand right now, and I think there are three of them. Generally speaking, I tend to be more interested in the permissionless side of things. But so one is just decentralized applications, so like peer-to-peer applications based on the token and its appreciation over time. So as a user, you need a token to access a service, and then that service is provided by a peer-to-peer network of nodes that get rewarded in the same token, right? So think, most of you, I assume, are very familiar with that, but Ethereum, Augur, or even some projects that haven't been as successful or high profile as those two, but that I think showed a glimpse of what it could look like in the future. So things like Lazuz in Israel, for example. So why do I like that? Well, first, I think that I strongly believe that going forward, humans will organize their economic interactions in a much more lateral way, and in a way like marketplaces and the sharing economy were sort of the first the first step in that direction. But I think that we're going to have a second bounce of that ball, and I think we're progressively moving from a world of like centralized service providers to like marketplaces, two-sided with like one central authority on top that still generates a fair amount of the profits and manage to build those natural monopolies by building information silos. And I think those are progressively going to be challenged, maybe dislodged by a set of protocols, and decentralized applications built on top of that. So that's at least the closest I can see to what could potentially dislodge those in the future. Then the other thing I like is that I kind of view that as a new business model for open source software as well. So we've done a fair amount of open source software investments, and traditionally, so the model for those companies has always been the Red Hat model, right? So you use the community to build some piece of software, and then you sell services, mostly to large enterprises that try to implement the software. And here you kind of have something different by way of the crowd sale mechanism. It's a little bit like pre-selling early licenses to a software, and in a way, if you manage to also pay early developers that way, it's a little bit also the first time that open source, I think, is able to monetize like the phases of protocol development. Now there are many challenges and things to understand. Like some of the obvious ones are, as a VC especially, like how the fuck do you invest in that? Like we also have investors. Like what do you tell them? Like we're just going to buy tokens, so whatever application X, and then that's what we hold. How does monetization work? Like, is it purely and entirely through the appreciation of the value of the token? And then, where does the defensibility come from in this world as well? Because if the software, all of the software is open source, how do you ensure some sort of defensibility and to protect against forks? So there's still it's a completely new sort of field for us, and I think it's quite fascinating, and that's something I'll certainly try to pay attention to. The second one is so what I call product companies, right? So I'm a big product guy, generally speaking, and I find that so within the space, we've seen a lot of APIs companies, we've seen a lot of, I would say, almost agency-like companies, selling implementation and services to corporates, but we haven't seen that many real product companies. So what I mean by that is like companies, really addressing, a pain point in whatever industry they're working on. It doesn't have to be finance, whatever, and then shipping, very user-friendly product that leverages the technology, but where the end user, at the end of the day, doesn't necessarily even have to know what's under the hood, right? So really, companies that build products around that stack, and where that stack really makes sense. And the third one I'm not super interested by the payment side of things, but that's the one thing, within payment that I find interesting, micropayments and machine-to-machine payments in particular, because I think those are probably the two things that our current payment infrastructure doesn't really handle well. And I think those would be, I think everyone pretty much agree that the way we pay for content online is kind of broken, and then once we are surrounded by all those connected devices, they're going to have a way to exchange value in a somehow autonomous manner, and I'm really trying to find the companies building the rails for that to happen. Then I mentioned maybe just I'll touch very briefly on some of the pitfall. I thought it might be interesting. Like it's some of the things that I see in pitches sometimes, and that I usually try to question. And two main ones come to mind. They're kind of related, but sort of the first one is that, and that comes from a big decentralization fan, by the way. But like decentralization doesn't always make sense, right? So first, there's a bit of a cult built around this idea of decentralizing everything. But I think you just have to be cognizant that decentralization has many phenomenal properties, but it also comes at a cost. And as we've said, many times even today, reaching consensus in a distributed network sort of takes time, and doing it in a secure way, tends to be expensive as well. And I think it's just, you just have to be cognizant of those trade-offs and recognize that there are some real economic implications. So my point would just be that we should, and entrepreneurs at large should think twice about the use cases where decentralization really makes sense, because the advantages really outweighs and are worth incurring the costs. And that's kind of why I've always also been skeptical towards that, attempts at trying to turning Bitcoin into a competitor of, like, say, Visa or MasterCard, etc., to try and make you pay for your, cup of coffee at Starbucks. Because, I just think it's a pretty poor use case of, it's payment works fairly well in a centralized way, at least for, when we're talking that sort of amount. And I just think that it makes a lot of sense to, compromise the very nice property of Bitcoin, that, decentralization of trust, in a way to, build a competitor to those payment networks. And then the second one is kind of linked also, but like a blockchain is not always necessary, right? And that's usually one of the first questions I ask entrepreneurs. So why even use a blockchain, right? So it's kind of, in tech we have this saying that goes again, it's a technology looking for a problem, and sometimes you get a little bit that feeling. Because it's very easy to fall in love with this technology, right? And to see like potential use cases sort of everywhere. But is it really the type of data structure that really makes sense? Not always. And it's not the I think there are many other data infrastructures that even use cryptography for some of them and don't necessarily involve blocks or blockchains, and I guess I think it's I'm really looking for those use cases where that particular architecture makes fundamental sense, and that's pretty much all for me. So yeah, by all means, do get in touch if you yourself or someone is building a company in the space, whether that's in my areas of focus or just in the space in general. I'd love to have a chat. Yeah, thank you very much. Sure.
How many investments have you done so far?
In the space, we haven't done investments yet, and we are currently raising our fourth fund, which will be live early 2016, and as part of that, that's going to be one of our main focus.
What's the investment range?
So I'll just go back to this slide here. So an easy way to sort of, there are many shades in gray all the time, but I think an easy way to break it down would be like pre-seed, where it's usually ticket sizes between 100 and 300,000 euros.
And it's the valuation on.
Sorry?
The valuation.
It's really dependent on the case, but like,
for sure.
For example, we've done that's something we've done a lot in gaming, for example, where we go like super early. It's really idea and one guy, and we've done a lot of that in gaming with teams that come out of like Supercell or Rovio, and we just like plan that idea of building a company of their own, and we give them a small check to just quit their job and maybe hire the very first initial hires, So we usually take between 5 and 10%, when it's that early. So it's really, it's really kind of a first foot in the door sort of investment. But that's usually when.
So it's like angel. So
Almost,
it's
you could say. So
angel.
it's really in angel rounds, yeah. So we do, and we've done more and more of that, and I think that's something we want to continue doing. It's usually with teams that have like very deep industry knowledge, or that we've known before. Most of what we do is like what people would call traditional seed, right? So ticket sizes between 300 and €1 million, I would say. And here it's usually at the stage where the core team is in place, and there's a product, maybe a product in beta. Sometimes you could, not always, but usually you can see the very early signs of traction, right? And that's most of what we do. And then we also do sort of the occasional, Series A investment. And here, it's teams that are a little bit further developed, and there's a product that's live, and there's traction, sometimes early revenues, and it's ticket sizes between 1 and 3 million euros, I would say. But then again, we mostly think about it as in we want to be in the right company. So we're not like super strict on like amounts or valuation. It's really about venture tends to be an outlier game. So a very small number of companies will explain most of the returns in the industry, and you just try to be in those ones. I hope that answered the question.
Yeah, okay.
How big are your funds?
So we've raised 3 funds in tech. I forgot to mention. So we have at Samsung we have one tech sort of department and one life science department. The funds are completely separated, and the teams are completely separated. We share the same brand and the same office and the same sort of back office, legal and finance. The funds in tech we've raised 3 funds, all of them in between 100 and 125 million euros. So our third fund that we're currently investing out of, and it's almost done in terms of new investments. We've made about 30 investments in this one. Yeah.
I appreciate the fact that you don't make companies move to Palo Alto or whatever. But how strict is your focus on Europe, given the situation that Bitcoin especially has potential in regions like Latin America, Africa? Would you also invest in those regions?
So we have that's always something that you negotiate with your own investors. When we ourselves have to raise money, we're raising money from someone else, and that someone usually is like big institutional investors like pension funds or insurance companies. And so we have our core focus in Europe, EU 28, and we have to do like 80% of our investments there. But we can always we have that a little bit of bandwidth to sort of be able to invest in like amazing opportunities that might pop up from elsewhere. But that's really different on a case-by-case basis. It really depends on the agreement you have with your own investors.
How much of your tech fund you want to invest in that field, in that space, in the blockchain?
It's hard to say, because obviously we haven't even finished to raise that fund yet. But I would think that broadly speaking, I can easily see ourselves having like 3 to 5 investments. And that's at least what I'd like to do myself.
What's your thought about the DX? So I think you as an VC, you need a legal environment that you can invest in. So, but the structure of the DX, the idea behind is different. So you mentioned it already. So how do you invest in that? Do you buy bitcoins and use the bitcoins to buy the
Yeah, exactly. So that's weird, right? So we're, yeah, I've actually had a brief chat with our legal counsel around that, because it's, you know, it's some of. If you think about Ethereum, I mean, everyone has, you know, their own opinion, but it's. I personally think that it's. I don't even know now if I should call it a European company or not because it's so, you know, distributed. But I think it's one of the most interesting projects / companies being built, you know, right now in Europe. But you know, how do you invest in it as an institutional investor, right? So I think one way might be to set up like sort of trusts and that do nothing but to hold those tokens, and you might set up a trust per token. But then yes, so you would have to. You know, you have to set up a trust, wire money to that sort of SPV or vehicle that buys bitcoins and then in exchange for tokens, and then holds the tokens. It's, you know, it's completely new. I don't think anyone has a good answer to that. I think many people are waking up to the fact that, you know, it kind of makes sense for a lot of, you know, open source companies to maybe be structured, you know, that way. And you know, if we do see, I mean, this whole thing might die, you know, tomorrow. But if we do see more and more interesting DApps like managing successful crowd sales, at one point you're gonna have to, you know, find creative ways to participate in that. Yeah.
I'm sorry.
Sure.
Yeah, you said that in the pre-seed stage, you guys took 5 to 10%.
Yeah. Yes.
And in the other, in the seed, in the Series A,
Yeah.
what's?
Yeah. So again, that's you know, super dependent on the case, but I think that, you know, ballpark seed, we usually have between 15 and 25%, I would say. Closer to 15 than to 25%, but it really depends on the case, on the capital intensity over time as well. So you know, as a VC, it's not only about the initial investment you make in a company, but you also want to be in a position to be able to continue to, you know, to finance the company in the next successive rounds. And you know, obviously, if you expect a company to be like super capital intensive and to raise like huge amount of money, you know, the next investor usually asks you to ask the previous investor to participate, to show like as a token of like, you know, and then if you own like, you know, 30% of something that raises like huge rounds like every year, you just your participation in those successive financing rounds will like mean a significant deployment of capital. So that might not be the smartest thing to do because it comes at the expense of making new investments also. So in those cases, you might not want to have like too big an ownership stake for your own sake as well. And yeah. Sure.
So you highlighted 2 points of interest, right? DApps and then more as a product company. From within this tech perspective, this is only a subsection, but then if you're building either a DApp or a product company, then you might use decentralized technologies as a stack.
Absolutely.
But your product might actually might be a tech product, but not specifically a Bitcoin or whatever.
Sure.
Can you sort of sketch how wide and where you're, as a VC company, the tech stack is sort of oriented? Because you'll be interested in the actual product that a company sells as well, I imagine.
Sure, yeah, no, absolutely, and mostly we would be interested in that. So what I meant, I guess, by that is, where was it here? Is really sort of products. It could be like, you know, I had a chat the other day with give you a concrete example with the founder that wanted to. His idea was to sort of disrupt corporate lawyers by using a mixture of the blockchain to sort of notarize documents, and then artificial intelligence to sort of be able to answer your questions by email in an intelligent and autonomous way. And so it's that idea of using perhaps the blockchain as one building block. It doesn't have to be sort of the only thing, but just use it as a building block to shape products that that can be in whatever. That's just an example, but like I've looked at stuff in supply chain management as well, or finance. So it's I hope that answered.
Yeah, very much.
Yeah.
So it can range quite widely
very
as long
much,
as you're
really.
smartly
Yeah,
using the tools.
yeah,
that
yeah.
exist.
Absolutely. All right. Thank you.
Cool. Thanks so much, everyone. Thanks again, Ryan, for streaming. So yeah, let's head to the bar. We can have another drink.